mortgage rates have gone up. Due to this, many people are questioning whether they should wait to buy a home or if it is wise to buy within this market. We just came out of an extreme seller's market where sellers received an average of 10 offers that bidded thousands over the listing price. And in San Antonio, we saw buyers offered an average of $30,000 and more. Additionally, buyers waived appraisals and did not request repairs, among other traditional terms that were given up in order to make offers stronger. To correct this market, which was just exhausting, the Feds purposely increased interest rates. By increasing rates, the number of buyers who qualify for a mortgage loan decreases, which means that there is less competition for homes, causing properties to stay longer on market and prices of properties to decrease due to this decrease in demand. So, if you are thinking about buying, you should not be put off by the rising rates. It is true that your mortgage payment quoted by your mortgage lender may look different, and you will have to dedicate more of your payment to the interest. If you want more information about the parts of a mortgage, which is referred to as PITI, check out our video where Pete discusses this. Housing experts recommend that home buyers should look at high mortgage rates as a temporary condition, because with higher interest rates, that downward pressure on prices that I spoke about earlier happens. The same house that you were looking at 6 months ago will be on the market for at least $20,000 or less within this market. Therefore, that payment that you wanted may be more feasible because even though the interest is higher, you are paying less for that house in purchase price. Not only are you paying less in the actual price of the home, but now you as the buyer have the upper hand that sellers had in the previous market. You now have choices because more houses are on the market and staying longer, and the longer they stay on the market, the more negotiating power you have on prices and other terms that were waived in the previous market. Terms like longer inspection periods to do your due diligence of the home, more repairs completed by the seller, appraisal protection, and seller concessions. So the market has swung from the advantage of the seller to the buyer. So naturally, the next question is, besides better terms, can I afford it even with house prices decreasing? The answer is you may be able to. Lenders want to be able to continue providing loans. So they are now offering loan products that help buyers to buy a house with a payment that they can handle. That is why many have coined the phrase, marry the mortgage and date the rate. In marrying the mortgage, you cannot renegotiate your purchase price, but by dating the rate, you can refinance your loan later. As a result, high interest environments can actually be an excellent time to buy a home. You will have to pay more for a while, but when interest rates drop, you can refinance, ending up with a better monthly payment than you would have if you had bought during a low interest environment and you got that house cheaper than what that buyer got for it in the last 2 years. And besides refinancing, there are things you can do now to help you get that house cheaper and with better rates. One way is to make a bigger down payment to make the loan amount smaller. Or you can take that extra money and buy down your interest rate. Or you can get an adjustable rate mortgage known as an ARM. Many lenders have come out with what is called a 2-1 or 2-1-1 buy down. They usually offer interest rates 2% lower than the current rate for the first year, and then the rates increase 1% for the next 2. So in this marry the mortgage, date the rate scenario, the goal is to give you an affordable rate now, and then you can either refinance when the rates drop, or you can ease into a higher payment as you grow financially. And with those seller concessions that I mentioned earlier, in this market with houses stay on the market longer, buy downs have become a negotiating tool that sellers are offering. A buyer can ask for seller concessions and use this money towards closing costs. In this market, sellers are more inclined to offer these concessions upfront or agree to these terms. These concessions help the buyer by having less closing costs, which means more money saved in your account in the short term, or pay down your interest or buy down for better payment. And if you are thinking about a new build, builders are offering the 2-1 buy down upfront. They are paying for these buy downs instead of decreasing the price of the property. So as you can see, buying in this market can be feasible and beneficial by taking advantage of the decreasing prices and negotiating opportunities. If you want more information about how this may benefit you, do not hesitate to reach out to us. Thank you for watching this video. And to get notifications of future videos from our team, please click on the subscribe button below. Our goal is to educate and help you make the best decisions for yourself. Our contact information is below, and we look forward to serving you, and we'll see you in the next video.